there have been quite a bit of commotion and ruckus around this company called Chocolate Finance. And I think what more than having more influencers coming into this topic to express their opinion. If I'm not wrong, both of us have never talked about Chocolate Finance in our personal or even professional endeavor. We have not received any form of affiliate fees. We are not paid to do anything of it. And we are posting this video on Backholder because both of us are pretty passionate about this topic. And we have a lot of things that we want to discuss, at least in this realm. So I think just to give you guys a bit of a timeline for those of you who are maybe you're overwhelmed by the number of developments. I think firstly what happened was on the 5th of March, Wednesday, Chocolate Finance actually updated their FAQ, stating that AXS no longer accepts the debit card payment. And 2 days later, on the 7th of March, I think there were reports emerging saying that AXS has clarified that it was Chocolate Finance itself that requested to halt the payments. So then some of you might ask, actually, what's all this commotion about? Why is there so many headlines and stuff? So you really have to go back all the way to when Chocolate Finance was first introduced into the system. I remember back then I saw one of their booths in one of the events or festival, and they were still new in town. They were still accepting opt-in emails, meaning to say there was no product at all. It's just that if you're interested, you can send in your email. Once we are ready, we will send you the application or sign up. They're just a fintech player that allow you to park some of your funds with them, and they are giving you X% returns. And back then, I believe the headline number was around 4.2%. And I think that was a number that was never seen before, at least from a traditional finance space, meaning to say like your banks, your fixed deposit, etc. They don't have that. And when they marketed the product, at least from a consumer perspective, they allow for instant withdrawal for the first 20,000. And for the first 20,000, they also confirm an X percentage. And back then was 4.2%. So it really felt to people that it was a no-brainer. It was kind of quote unquote risk-free. I can put in my emergency funds there and they maybe invest. But we all know that there are probably some caveats which we can expound a little bit on later. So that's just a bit of a backstory. But after fast forward to a few days ago, so I think on the 9th of March, Sunday, there were a few creators. Actually, I wouldn't say a few. We can just name drop. I think Satisfy from Satisfy Personal Finance. So Seth actually dropped a video, I believe was on Sunday, sharing his opinion on Chocolate Finance. And he was saying that he was withdrawing everything from his CF account. And I think one day later, on the 10th of March, Kelvin also dropped a video saying that he's also withdrawing from Chocolate Finance as well. And after that, we then started seeing headlines coming in saying that Chocolate Finance is experiencing some sort of a delay or temporary delay for instant withdrawals. So I think after I laid out this whole context, might be a little bit too long, but maybe you'll get Bunty first when you are monitoring this whole event. What do you think? What's your opinion first? Let's not talk about what went wrong or was there any marketing communication issues or some misunderstanding between the consumer and the company. But just what was your thoughts when you see this whole thing playing out?
Yeah, my first reaction is that this will be a nothing burger because, sometimes when things get hoo-ha, there's a lot of drama, people follows. It's as if like these things is huge, right? It's similar to, some rug pull that people are losing their money, but I don't think that's the case. Because based on what I understood is that it's not like this company is doing fishy stuff. So it's not like a crypto company, stuff like that. So my first reaction is that, okay, it probably would just, take a few days to clear out the misunderstanding. And then if people are withdrawing their monies, then as and when they get their money back, then the so-called the confidence will be restored and then things will be okay. But when I monitored the situations, it seems that there are some crises, not the sense, not the type of crisis that they have liquidity problem, they can't pay or they suffer losses. It's not like that. It's more like a PR crisis. That's my take on these situations.
And personally for yourself, I believe back then we had a private discussion about this. I just wanted to know your thought process on why do you have any money in Chocolate Finance? And if you don't, or if you do, why or why not?
I don't have any money with Chocolate Finance. I think no particular reasons. I'm just someone who's very lazy. So I'm not the type of people who keep on looking for lobang here and there and just want to maximize that 0.1% or 0.5% returns. Even Kelvin also scold me for like not maximizing all the benefits that I can get from all the credit card stuff like that, right? So you also know that. So I'm just not. I don't play that type of games. So that's the short answer. And I think if I am to put money in, I need to do the due diligence. and I need to spend effort in that. So there are people who spend a lot of time on all these kind of things like Satisfy, Seth, right? And also Kelvin, because they really passionate about all these topics, but I'm just not that passionate. So I know there are monies on the table that I'm just willingly let go, just not my passion. But I want to turn it back to you, Chicken. I know that you don't have money with Chocolate Finance, and you also, promote like affiliate links for other products that you use, right? But why not Chocolate Finance? Because it's like no brainer, right?
To the extent to say that it's no brainer, I think it's a bit of a stretch. I think let's not go there. But I think just some context as well is that I opened using Kelvin's affiliate, of course. We need to support our friends. I opened a CF account before. I've deposited actually money before into the platform, but I've only toyed around for like 2-3 months, and then I extracted the money. I extracted very early on, not because I don't trust the platform per se, but it's just because I want to buy stocks. That's why I needed to use the funds. Simple as that. And maybe unlike a lot of people that have a lot of emergency cash, I am in the camp that you should stay fully invested most of the time. So, truth be told, I actually don't have a lot of spare funds. Even if it's spare funds, it will be in the brokerage account itself, which already have some of these money market funds. So, my perspective is back then when I saw this platform, I think it was a very interesting concept, and I can understand why there is a gap that they are trying to fill there. Meaning to say, I can envision the customer avatar, but to say that this should be the go-to or default platform, and to allow for most of the Singaporeans out there that are probably not very interested in investing, doing a due diligence, right? I think that's a bit of a stretch as well. But back to my point, initially I thought that it was a very interesting concept for people that don't want to go through the process of doing DD on buying money market funds or short-term bond funds. They don't know what to do. They just throw it in. The company will decide for you, and they give you some sort of a return, and they take a cut. Actually, this whole game itself, when you look at it, it's an AUM game. For those of you who don't know, AUM is asset under management. What they're trying to do is basically pull in hundreds of billions of dollars together. They get a certain X percentage. They give you most of it. They take a cut. So the cut is their margin in a way. And of course, back then, we all know that in the finance industry, the acquisition cost is the highest. So you see a lot of the affiliate links for the brokers. I'm not going to name any. They tend to have a very high upfront cost, but hopefully in the lifetime value of this customer that stays on the platform long enough, they're able to cover their acquisition costs. So back then, I think they did this promising of the 4.2%. Definitely it was attractive, but I'm more interested in allocating to equities. That's why I didn't bother with the percentage or putting my money there. That's just the context. But back to your question about not trying to avoid it, right? Firstly, I think it's a audience mismatch, to be honest. So I believe for those of you who follow us on Backholder, we can see on our back-end analytics that most are Singaporeans. But at least for my own channel, I only have 30+% Singaporeans. So actually, even talking about the brokers itself, my conversion rate is one of the lowest, if not the lowest, in most of this Singapore influencer. They all earn, like, they keep revealing their income 20-30K a month, right? I'm earning not even 5% of that. So don't be worried about that. And I think secondly also is that I think in terms of this business model wise, I don't know how sustainable they are. Not saying that this business is bad per se, but how it's structured. I mean, coming from an investor perspective, let's say I'm an investor of Chocolate Finance today, I'm not necessarily sure what's the runway and how are they going to build up the entire ecosystem, because we know that the whole Singapore finance scene is very fragmented. People are just too, I can't say price sensitive, people are just too rate sensitive. Singaporeans are too calculative. The moment they see 0.1, 10 basis point move, they all move their money. So that's why at the earlier part, when they managed that 4.2% guaranteed return, right? It's all short term because the Fed's gonna reduce rate, and sure enough, they reduce rate. That's why the returns start coming down, and then it start dropping. So, in a way, they are basically targeting lazy money, meaning to say those that already acquired and then they stay on the platform and keep it there.
Yep.
But for a lot of all the more calculated, later I get flamed in the comments. I'm not saying you guys are calculative. For those of you that keep wanting to optimize your money, Chocolate Finance really cannot earn your money. Very in dialects, 金刚扣, very hard to earn this kind of people's money. So that's just my my perspective on that
Yep.
affiliate thing.
On the business model, right? Because just now you mentioned that they just want to invest the assets first, and then from the assets they take a cut, right?
Yeah.
But from the rate that they're offering is so good that that cut, right? Is it a positive number, or my sense is that it is at least negative, at least for the first few months or first few years as they accumulate the assets, right? Maybe it will lower down the yield that they provide to the customer, then they can start to have positive spread, right? But I think for the first, at least like first year or first 2 years of their business, I don't think they have a positive cuts. Do you agree with that?
Completely agree. And not only that, because we are students of businesses, right? When we look at um not apples to apples comparison, but when we look at companies like Grab, for example, using an analogy, they want to bait the fishes in first, and then they start creating the net bigger and bigger. So that's why they started coming up with debit cards, allow you to do miles, meaning to say maybe they don't offer you such a high percentage on their core product, but at least in their ecosystem, they're able to still keep you inside because there's other values. So that's why they came up with this big hoo-ha about clocking 2 miles per dollar on the credit card and sorry, not credit card, on the chocolate card, debit card. And then after that, of course, there's further developments down regarding it being a very unprofitable segment. That's why they needed to stop the partnership with AXS. And I think in one of the interviews with, I think, CNA or Business Times, he was saying that there were people trying to quote unquote game the system. I just wanted to know your thoughts on this. I'm not too sure whether you know of the 2 miles per dollar. Maybe you can explain a little bit and then what happened thereafter and what's your opinion on that?
I'm not expert in all these mouse things, but my take is that whatever they're trying to do, right? I don't think the spread part of the business is their core business. That is probably one part of the business, because eventually when they have many customers, they are already in the ecosystem. They can actually monetize all these users or investors using all sorts of methods, right? And I think all this, when it comes to payment, right, is also one, could be a lucrative business for them to actually generate income. Because I think, let's say for banks, right, as you use all the credit card, actually banks also profit because they charge the merchants some dollars, right? I believe, let's say if you use chocolate cards, right, and then you do the payments, you also get to charge the merchant. So that's the revenue that they can attract, right? But you need to attract the user come to your platform first, because the alternative is that users might be using their credit card on some other banks, and they get to enjoy other perks, right? So of course they need to come up with something that is good enough to attract new users that come in, and then I think that's the first step, right? And then as and when more and more users come, and they can lower down the benefits, and then hopefully some user will stay, and then that's how they capture the profits. I think that's the game that they're trying to play long term. It's just that sometimes when you design all these perks or benefits, it is quite complicated, because I mean, the reason I don't play so much on all these games is because I think it can be quite complicated. But it's like a games, complex games, right? So people just play it, and then some people, they are just so good at it, and they know how to maximize the benefits. And if they maximize benefit, what it means is that Chocolate Finance is the company that actually pay the cost. And if the cost is negative, the question is always that, can they actually sustain this for long period of time? And you just imagine that if one person know this, let's say another 999 people don't know about all this game, right? They don't know how to maximize it, and you can still play for some time. I mean, it can sustain longer. But when people know it, they just spread to the world. People like Seth, right? The moment he figure out the recipe, right, he will share with, at least with his subscribers, right? And then people just replicate the strategy, and then just game out of it, and then just make the cost so high that they have to stop it, right? So I think that's the part where the stopping, when it is not handled in a good way, it creates all this frustration and all this disappointment on their user base. I think that's the problem that leads to all this, other problem later on.
Yeah, I think when we circle back to the business viability part, right? You, like you said, it's always to attract people at the upfront, and then
Yep.
you either cross-sell or upsell them something else that is hopefully profitable or income generative. But I presume that now, I think a lot of all these new startups, that's just the fact of the matter. This is how they are playing this entrepreneurship game. But back to the whole partnership with Haymax and offering the 2 mile per dollar thing, I feel that you can't blame them, because it's perfectly in the terms and condition. You set out the rules yourself. You are the, I cannot say you are the casino, but you are the zhuang, you are the
Yeah.
banker,
Yeah.
right? and people are playing according to your rules. And if you say that some people are exploiting the system, unless it's explicitly made known, if not, I'm sure, like I said, Singaporeans are really one of the best, one of the most brilliant. I still remember back then, just a story time, right? I remember back then, Pokemon Go was a very, very big thing. Wow, you know, the number of they open source and Excel, and then they optimize the route to do gym fighting, to look at the Pokemons and stuff. So sure enough, I mean, if you allow, and we are definitely all highly educated, so you will have these few people that are in the elite space, they will figure out something and then they'll mass distribute and allow for people to play with the system. So generally that's how I think about this whole Haymax partnership. But anyway, or anywho, anyhow, I believe once they retracted, I think it's fair play. The company can come up with something, they can also retract something. I think it's up to them to decide on how they want to massage this whole system and to play or create this system for them. But yeah, I think that's generally on that part. I think the second part that I wanted to raise is also, I think if you watched Kelvin and Satisfy's video, uh, they didn't say in specifics. Just wanted to get your thoughts on that. Do you study much or look into that a lot?
Yeah, I think first thing is that we don't have the details, right? We don't know what's the communications between I mean, let's say Kelvin said with Chocolate Finance and also with AXS, right? We don't know. Like you and me, we don't know. Like they don't, right? But let them tell their stories if they are comfortable to share the stories. But just from our, the public, we are both public, right? From public perspective, is that okay? There might be some sort of miscommunications, or you might call it like, just I think miscommunications might be the right way to say it based on the information we have now, and they are trying to repair the situations, basically. So yeah, I'll keep it at that now. So because we really don't know the details, right? Basically, it's just like, oh, there this version he say what, and then there are some error message, and then they try to correct that, and then but reputational damage is already done. I think that's the situation. So.
I think also we've discussed a lot, but I think just to put it on the record, right, officially, I think both of us share the same opinion. You can correct me if I'm wrong. Is that we don't think Chocolate Finance is doing anything shady. For those of you who are still processing your funds when you withdraw, within that stipulated time frame, you are most probably going to get back your funds. Why is there this sudden removal and instant withdrawal? It's just because they have a liquidity pool that aids the instant withdrawal, but actually, in reality, it shouldn't be the case. So if they started out as a fintech platform that tells you that they are invested in some short-term bond fund or money market fund, usually the redemption period takes at least 1 to 2 business days. So it's not instant withdrawal. The instant withdrawal is just a perk that they included on a business point of view. They are not obligated to give you this instant withdrawal. But probably because of miscommunication, people thought that everybody extract money, suddenly the money cannot come out. Then they say that this is going to be the next XXX company that went under because your money was lost in the meantime. So we don't believe that this is the case, and you are probably going to get back your money in full or whatever the market price is when you decided to liquidate, send your liquidation notice to the company. So yeah, that's that.
Let me also just provide some insights on how all this instant liquidity works. Because this one is quite interesting. Like you said, if they are just another platform companies that invest in bond funds, right? Every time you put your money in, you will take a few days to place the funds, get invested. And anytime you want to withdraw, you actually have to wait that few days for the transaction, for the settlement, all those things. So that is the standard practice of investing in bond funds. But how this liquidity pool or liquidity program works is that, let's say if they are accumulating assets, accumulating more users, and then every day there are more net users that come in onto the platforms. So these are the users that put in money, right? You put in 3,000. Okay, you put in 3,000, another person put in 5,000, another person put in 20,000. There are people who put money in. At the same time, there are people who just want to withdraw their money for whatever reasons, right? So I think that's the normal situation, is that there are people who are investing, there are people who are divesting. As long as this net investment and divestment is positive, what it means is that from Chocolate Finance perspective is that they are actually keep buying all these bond funds. Because say, for example, one person buy 10,000, another person just withdraw 5,000, they are still buying the 5,000 bond funds, right? As they continue to buy, right, you don't have to do the selling for that 5,000. You just take the 10,000, net off with that 5,000. Basically, you just buy 5,000 for the person, and then on the back end, you just allocate the funds accordingly. So they don't have to sell. That's how it works, and they are able to provide instant liquidity because they get the liquidity from the new users, right? So things are very easy as long as the assets are going up. And then by going up, I mean more users are coming in onto the platforms. Not saying that the investment must go up. And secondly, all this money are invested in short-term bond funds, which are usually very safe. So we are not expecting this kind of bond funds can drop significantly within short period of time. So that's why they are able to provide all this liquidity. But they cannot keep so much liquidity on that pool because it is very costly. For the money that you are not invested in funds, right? You are actually not generating income. So they have to pay that income as soon as you put your money into the system, right? So they have to they have the burden to pay you to give you the returns, but they are not earning that returns if they are sitting on like something that's liquid, right? So that's the situation. But you imagine that the situation turns, right, as and when it become negative, there's more outflow as compared to inflow. That means they have to sell. And the moment they have to sell, right, how much liquid assets they have on hand is limited. So they just use up all the liquidity on hands. And if it is still not enough, they have to sell all these bond funds to transfer them, become cash. Then only they can use it for payment, right? For those who are withdrawing their money. So that's when things get tricky because you cannot pay instantly because the selling of all these funds, right? It will take few days for settlement and so on. So that's a situation they are in now. Not saying that people are losing their money. It's just that you need to wait longer because the liquidity pool has been depleted. Yeah.
On this point, right, I believe I was reading an article, and we even privately had this conversation. Business Times wrote that there was this bank run scenario, right? They used this term explicitly, bank run. And I made a joking remark on my own private social media platform, right, saying that they're not even a bank to begin with. What kind of bank run we're talking about? But in fact, I think I stand corrected. Bunti has schooled me on this idea that the idea of a bank run doesn't only apply to banks. Maybe I want to talk a little bit more about this phenomenon.
Yeah, when people come up with all these terms, right, like bank run, right? I think the first reaction is just like you need to run. It's like you are in the cinema, someone just shot fire. You don't ask where's the fire. You just run out, right? So that's the situations that we are facing now. But come back to this, right? Usually bank run refer to people liquidating money from their banks because they know that the banks might go under. So I think this is happened, I mean, in history many times before, because when how banks operate is that all the depositors put their money in, right? They don't keep all those cash in the bank. They actually took the cash and then they reinvest, they borrow to someone else, right? So that's how it works, at least historically. So if everyone show up on the same day and just want to withdraw their money, the bank simply don't have enough cash now. So that's why they call it bank run, right? People are withdrawing money like in one go, and then bank have difficulty to just return the money. So that's bank run. But I think for the situation that Chocolate Finance is facing now, you can say it is kind of like liquidity, but I wouldn't even call it like a liquidity crisis because this liquidity pool, like we say, right, is not a guarantee. They even stated in their FAQ that if they run out of money, then you just need to wait that few days for them to sell the investment and then return the money to you. So it's not even a liquidity crisis. So that's why I say it's a PR crisis, not liquidity crisis. So depending on what you call it, I won't call it bank run because they are not bank, but you might call it liquidity crisis for non-bank entities that face this kind of liquidity crunches, right? You can call it liquidity crisis, but for them, I don't even call them as liquidity crisis because like you just withdraw your money, right? They will just sell and then return to you. You just need to wait that couple of days. I think there's no, that's why the nothing burger is what I mean.
To me, it feels to me like, right, actually, if you compare it to the brokerage platforms, CF doesn't seem very much different like the normal brokers. It's just that they just so happen to only sell bond fund. They don't sell you
Yep.
equities. They don't sell you crypto.
Yep.
Oh, and I think back to your question, you were asking why I promote like brokerages rather than chocolate finance. Uh, I think one more thing I've forgotten to add is just in terms of brokerages, it's relevant to what I'm talking about because people are interested in investing, buying equities. But specific to some of these liquidity solutions, to me, I feel like these brokers already have it. So I don't have to double unless I'm out for the affiliate fee. But I don't think that my conversion will be high. So I just didn't bother, to be very frank. But I think back to our topic again, I wanted to point out something, right? You said that short-term bond funds, we don't expect huge fluctuations in terms of the NAV or the prices that you sell, right?
Yep.
Will there be a 1SD, 2SD black swan event that suddenly bond fund can drop, let's say 20%, 30%, or 50%? Have you seen it before? Or is that even theoretically possible where there is such a huge amount of selling in the market? Suddenly you cannot hold the maturity. A 6-month, 3-month bond suddenly can drop 20%. Is it possible in theory?
I don't want to throw out numbers because I these kind of things, if you have some analysis done, you can pull up, you can calculate the number. And I without that numbers, I don't want to comment with the numbers. But this kind of liquidity crisis, right? Meanings that, oh, you have all these bond funds and the underlying bond funds are all these corporate bonds, right? All these, they usually their liquidity is fine, okay? Usually. You just sell and then, I mean, there are some fluctuations, but they are fine one. But there are some period, say for example, during COVID crisis where liquidity just dry out, right? You say you want to sell, you basically, the instruction has been given to the bond funds manager to sell, to liquidate, and they just took the bond investment they have, right? And on the open market, they say, who want to buy my bonds? I'm selling now. And people just don't quote them any numbers, meaning that you have to take a huge cut in terms of the NAV. Like usually the bond is trading at, let's say, a yield of, let's say, 5%, right? And then you say, I just want to sell. I give you 8%, nobody buy. I give you 9%, nobody buy. I give you 12%, nobody buy. I mean, this kind of situation happened in the past. The most recent one is actually during COVID crisis. Actually, the liquidity dried up like significantly. I don't know what is the number. Probably you need to sell at, let's say, 20% yield. And for a bond fund, let's say, not bond fund, for a corporate bond that is, let's say, 1 year, right? If you need to sell at the yield of 20%, what it means is that it's almost like these things worth $1 mature in 1 year later, but you are actually selling it for 80 cents now. It's more almost like that, right? For one year tenor. So I mean, this kind of situation happened, but I don't know like what's the percentage. To me, if you need to lose, let's say, 5% or up close to 10% for such a short-term bond funds, right? That is like super huge crisis already. It is not something that's normal. And that's why if situation like this happen, right, usually government or let's say like the central bank, they will step in to provide the liquidity just because things like this will get, it will turn out very ugly if it continues for too long.
But theoretically, there will be a potential case for that. So that's why they always say capital not guaranteed. You're subjected to
Yes.
market fluctuations. And sometimes some people were actually quite confused, even confuzzled when they saw some of the FAQs saying that, how come I press withdraw? Let's say I see 10,000 in my account, I press withdraw, but the money come back might not be 10, might or might not be above or below 10,000. It's
Yep.
because of this quotation and the selling processing that's why there's some fluctuation.
Yes.
I presume so,
Yeah,
right?
but you don't have to worry too much because you just need to check the NAV or check the price of those funds that you own, right, in your platforms. If you are the user, right, you just check. I think some users on Telegram also mentioned that they look at the prices, they are fine. It's not like they are suffering huge losses. By huge, I mean huge is like above 10% is like super huge. I don't
Yeah.
expect them to suffer more than a few percentage. That's
Not
my take.
not forgetting the idea that people think by the way, the bond market is bigger than the equity market. So
Yeah.
in order for you
Yes.
to move the bond market, there really needs to be, like Punti said, a huge liquidity crisis.
Yeah.
And not like our 10-20K that it's not gonna, even everybody on Mars move $1-2 billion. I think it's also not enough to get that kind of black swan 5-10% drop. But anyway,
Yes.
I think I just wanted to move over to one of the notes that Chocolate Finance actually put out, right?
Mm.
And it starts to get a little bit spicy. So, and I quote, we are currently experiencing an increase in withdrawals, partly driven by social media. We fully understand that seeing negative content can be unsettling. So we want to address this head on. And then I don't want to go on about it. But I just wanted to say that actually CF acknowledges that not forgetting the fact that, of course, Seth and Kelvin are very good content creators. They have a huge following base. And the video, I think, combined both of them have already garnered more than 70, 80,000 views. A company acknowledging the fact that social media has caused quite a ruckus with their liquidity pool. Do you have any opinions on this?
Yeah, I think this one, there are many people who blame Seth and Kevin that cause all these things, but we need to remember, right? This whole things, right, is because there's this liquidity pool, first thing, okay? And I think the company, Chocolate Finance themselves, right, they underestimate the impact or the response or the reactions coming from their users when they suddenly just pause the liquidity program. What I mean is that, that's why I call it like PR crisis, right? It's because imagine that, let's say someone want to withdraw, and then I don't mean like, situation like involves social media where many people involved at the same time, right? Let's say just a normal days, and then suddenly their liquidity pool just dry up, and they just send that notice to a couple of persons that try to withdraw. They say that, oh, we will take a few days to process that, but only a couple of people experience this, and it's not a big deal, right? Situation like this, I think we are all fine. Like, there's no panic. But right now, because of social media and because all these things goes viral, right? The reaction become overreactions. I think they also underestimate the reactions. So what I mean, what I'm trying to say is that if they provide all these things like a liquidity pool, right? They really need to make sure that the user know what is this, because they are the one that actually leads the users to believe that these things are liquid. And that's the selling point, and that's the biggest problem, because it is a mismatch of expectation. Because if, let's say, customers, everyone of their customer knows that, oh, this one is just available today, tomorrow, if I need to withdraw, I might need to wait 7 or 8 days. If the investor understand all these things, then there will be no panic at all, because people are just, they know this is the situations, right? But now people say that, oh, I need the money to buy the milk powder, and then now no money because the money stuck with Chocolate Finance. They exaggerate all these stories, right? So I think this is what caused the problem, because people panic as they stop the instant withdrawal. So I think all this can be improved by just having a more like a proper communications, and they just need to guide the expectations on stuff like this. So I think they are quite bad on the communications part. That's my view.
So in summary, it feels more like a miscom where they planted the seed. I cannot say they planted, but they intentionally or unintentionally planted the seed to many of the users that this instant withdrawal is a given and it's not a privilege. Because if somebody starts to feel entitled, thinking that this is like any other products out there with not much comparison, but clearly we know that it's not an apples to apples thing when compared to, say, a bank account or even a cash advance or whatnot. All of them all have different characteristics, and if they hammer home the point, telling you that, guys, it's an investment, it's actually in the bond fund. Actually, normal redemption is 2 days, but today, because we're nice, our business model allow you for instant liquidity, but very big but, then they start explaining their thing. I think maybe the expectation is that, okay, now I can instantly withdraw. It's a privilege, but someday down the line, I maybe might not be able to instantly withdraw. Then maybe people won't have such a huge uproar in terms of the discussions.
Yeah.
But anything you want to add further on this?
The problem is that if they say that to their customers, right, they will have a hard time to acquire customers. So I think they also attract the wrong type of customers. That's the things. That's why you and me also, we have such a bad comments on their business model. It's because of this, that there's a strong mismatch in terms of the expectations. And when it comes to their management, there's a mismatch between their assets versus their liabilities. Meaning that by liabilities, I mean all these so-called investments from Chocolate Finance side. This is basically their liabilities, right? As and when all these people withdraw, they have to provide the liquidity, they need to pay, right? But on the asset side, they need to take that few days to liquidate their assets. So this kind of thing is like, even before all these things happen, even before the 2 videos that came out, we can, project that if anything happens, situation like this can turn out to be a PR nightmare. And we also have seen, right, situations like GameStop, right? You see GameStop, people don't invest in stock market. Also, they jump in just because they are following the crowd, right? They feel there's a need to just, support their creators and just whack some hedge funds. So if you have seen GameStop saga, you will understand that situation like this happen. I mean, it can happen, and the likelihood of it happening is quite high. We are living in a social media world, basically. Like all these things, anything that have the potential of go viral, like they will viral someday. It's just that not this year, then just next year. So it's a time bomb.
Amidst this whole thing playing out, so Seth and Kelvin, they both run their own individual Telegram, and they have like more than 10,000 people inside. Not going to mention names, but I think one of the early investors in Chocolate Finance from a VC firm actually went into Seth's Telegram group, and then he posted a few comments to try to ease the public. And maybe I'll just quickly run you through some of the pointers he talked about. And I quote: "Firstly, for those of you who don't know, Walter, the founder of Chocolate, was the founder of Sing Life. He's one of the strongest founders in the region, period. So this is not his first rodeo. Secondly, it will be helpful if people bothered to understand what the product is. All funds are parked in money market funds. All money market funds are subjected to 2 to 3 days of processing for deposits and withdrawals. Go try out any other robo-advisor cash management solution, and you'll see that they have this as a standard processing time. Thirdly, the delay in withdrawal is because Chocolate maintains a liquidity pool to facilitate instant withdrawals. So this is not an infinite pool. Naturally, there are times when withdrawals are higher than others. But even if this pool is depleted, your funds are safe in the money market funds. It simply takes the standard processing time of a few working days, unquote. So this was what he basically sent in Seth's group. And this was probably at the peak of the quote unquote crisis. Actually, I wouldn't even call this a crisis, but yeah, at the peak of it, I think in the earlier part of this thing when it was developing, I think Business Times was the first one that came up with the article, and CNA, everything, they were still doing the journalism, and he came in to try to appease the people with parking money at Chocolate. So when you read this short note, do you have any thoughts about it?
Two things are okay. The first thing is that when he say it's money market funds, I think someone corrected him. It's not money market funds, because money market funds is really even shorter as compared to bond funds. So, we know that some of these investments actually get into bond funds. They call it, I mean, they're still short term, but I think short term bond funds could be much longer as compared to money market funds, and the chances of having capital losses also like much higher compared to money market funds. They are still safe investment. It's just that money market funds is still different compared to bond funds. That's my first reaction. Second thing is that I do think that a lot of things that he said, right, we also just, just now we have discussed it, right? So they are all factually correct, okay, other than the money market funds. So people just need to understand the product well. That's on the factually side of things. But I think he also need to understand from user perspective, how do they feel? Because if you are getting into a product thinking that you can withdraw the money anytime, suddenly there's all these negative things that is going around, and you don't know who is right, who is wrong. But the one thing that you know for sure is that now you already clicked the withdraw and you can't get your money back. And for this type of, for this group of users, right, they are actually not sure whether that money will come back or not. It could be 5,000 figure, could be 20,000, could be even more, right? And people are worried when you have money that is stuck somewhere and you can't get your money back. And people are nervous, right? I mean, these are quite natural. And if you come up with this kind of statements, do you think that you are able to give confidence by saying, oh, things are fine? So sometimes I think, yes, it's good to educate. I think that part is good. But the part that people who talk facts like you and me also, sometimes we underestimate the emotional reactions that is faced by all their customers who are struggling because they just worried, right? So I think there's no cure on this. You can't say a better words to just make people feel better. You just need to return the monies. I mean, on the back end, they could be selling the investment and liquidate and take the money and pay back, right? That's definitely that's the minimum things they can do. If they can do more, right? Say, for example, let's say they have all these external investor. If investors are willing to step up, use their line of credit or use their reputations, get borrowing from the banks or whatever, right? And just speed up the liquidations part, right? Even by just a few days, right? They can just return monies. Even not 100%, even just 20% of the people can get their money faster, right? It's still something that can help to improve the situations. And of course, other than that, it will be just communications. And I think the Walter, right, Chocolate Finance CEO also came out, make some video and say something about it, right? I'll say that, yes, that's the good part, is that he is facing the public. I think that's the good part, but at least he should say more, right? It's not like just 30 seconds video. I think at least show up on CNA and give a 30 minutes interview, try to help people understand the situations. I think that's even better. I think I hope that we have a longer conversations to help people understand the situation.
I 110% agree with what Bunti say. Same opinion. I do think that there is a time and place for everything, and education shouldn't come when your house is on fire. You should educate when everything is fine. It's like basically buying insurance like that. You don't wait until you bang or get into an accident, then you talk about insurance. So in normal times, they should have already. I mean, of course, a lot of all these are horseback cannon, right? How you wait for things to happen, but a lot of these issues that we are talking about now is that the education should come along the way, and then when things happen, then you don't have that expectations, reality, or miscom that comes. And also, a lot of people I see, I feel like they are quite jester, meaning they are clowning around. They are not seriously worried about their funds, but they just want to act, or they want to see the world burn, they want to see everything on fire. Then they say that, oh, you remember last time when I don't want to mention names, but some companies that went under, they keep telling you your funds are safe, your money is safe, everything is safe, it's 1-to-1, the backing, blah blah blah, all those kind of things, right? And the more you say it, the more it doesn't invoke confidence. Because if the money is really safe, why you need to tell people money is safe or it's segregated? You get
Yes.
what I mean? It's a bit counter logical. But I think just a few points on my side when I first read that point is that I feel, number one, it's a bit weird that one of the early investor of the business itself is stepping in to talk about it rather than somebody from the company itself trying to inject confidence. Because of course, I'll feel a lot more confident when Walter, first thing in the morning, suddenly go to CNA and start reporting and running the news headline rather than allow for some of these journalists to write whatever they want to write. And I honestly feel some of them that written the article, they did him dirty. They they just wanted to dramatize and bring everything up a few notches to cause that form of panic. So yes, you can blame the so-called influencer. They kickstarted this thing, but in between this whole supply chain, people down the line, all of them all added a few things. And of course, the delayed appearance, the delayed expectations to communicate to the public also kind of exacerbated the issue. That's one. So I don't think he's necessarily like the right person to come in to educate and to talk about it, especially from a very logical, I tell you this is what you should have known or done. I think that tone and the perspective is a bit weird. I think secondly also, some terms he used, I was a little bit allergic to it, because this is of course from a consumer perspective or a ex-consumer perspective, was that he cited things about, the founder is actually ex-Singlife. So he cited, basically it's called appealing to authority. Oh, this is not his first rodeo. You know that this is not his first startup. He's not some 菜鸟 in this whole industry. Sure, I think I get what he's trying to do, but I question the objective of this. Meaning to say, like, what's the implicit assumption here? Means that I built Singlife, my next startup will confirm be successful. So is that the implied meaning, or I'm trying to read, not trying to read in between the lines, but more so like, what's the purpose of telling me this? You can educate me, and Walter can go and tell people that I'm Singlife, but from an early investor telling people about this, I'm not too sure what's the objective, especially in this so-called PR crisis. Secondly, I think also he's to put it in simply plain English, he's just pointing his finger and telling the Mr. Tan or Mr. Lim of the users, telling you that, see lah, how come you don't know? When you sign up, right? This is a bond fund, ma. How come now you KPKB say that your money cannot come out? By right, your money won't come out. What? It's a goodwill that we allow instant withdrawal. But I feel like I completely agree. Like, customers should do their own due diligence. All these are financial products. Is your money matter more to you than anybody else? But I think when I reference back to when I was studying this in my finance classes, right? When they talk about back then the '08 Lehman moment, a lot of the banks all these are big financial institutions. They're selling this thing called mini bonds to the retail investors. And they call it mini bombs. Last time, the funny thing is they call it mini bombs, right? Because everything chipa boom, right? So customers in general, through the test of time over the last 50, 100 years, something won't change. They are definitely all less educated than all of you that are in venture capital, in private equity, got CFA, got CPA, whatever it is, whatever you all have, you all know what you're getting yourself into. So when lose ready, you know that you assume the risk. But for a lot of the layman people out there, really they just don't know what. That's why there's so many regulations by MAS and stuff like that to do all this protection of the retail investors. So I think, like I said, there's right place, right time. When you are talking about or trying to educate at this particular timing or this particular moment, I think there's really no point trying to point fingers and say that, hey, you all should know by in the first place. The focus or the emphasis should always be just wait 2-3 days, confirm will get. I don't know they use what to confirm, but if they can give some sort of assurance, yeah, then that's how you build back confidence, and not so much about this is a bond fund, still talking about the bond fund and then how many days it will take to approve. So I think the perspective is just a piece and then move on. Education comes in later. There's no point trying to guilt trip the consumer saying, hey, see lah, why you're going to buy mini bomb now bomb ready, right? Or see lah, now you really go and buy a money market fund or buy bond fund, but you don't even know you buy bond fund. So I think that's the distinction there that I think could have been done better.
I think he's trying his best to calm the users, but I wonder how useful it is.
The two videos that Seth and Kelvin put out is extremely spicy. If you just scroll down to the comment section, right? Wow, a lot of them got a lot of upvote. Like I've never seen before this kind of upvote percentage, meaning 50, 100 plus likes. The best I see, right? Actually, you can get 5-10 likes for our size, right? It's very good already. They got 10x of that. So I think I'm just gonna read out, like we'll go through a few and just want to get your opinions. Also, maybe to share your thoughts as a friend. I think both of us are friends with, we can still qualify ourselves as friends of Seth and Kelvin. And also to talk a little bit about your opinions about all these accusations or flame they throw to influencers. So let's start. 70 likes from this user called Walk88. So you admitted that this is a collaborate strategy by you and Seth to release the videos at the same time. What is the intention? To create maximum impact and causing extreme fear? I don't think you guys are safe behind your disclaimers. Then from another user called Owen, he said that you guys keep saying chocolate finance isn't transparent, but you and Seth both say, quote, something that happened privately that you don't want to make it public, unquote. Actually, your approach is the one that's untransparent either. Maybe the real reason is not about the interest rate decrease or AXS nerf. Do you have disagreement with Chocolate Finance about how the referral money was being distributed? These two comments, I think, quite interesting. So Bunti, maybe you want to first express your thoughts on it. I think got two parts. One is it elaborate and a collaborated strategy to bring down or whatever. And secondly is about this idea of transparency and then whether the announcement of them pulling out their money from Chocolate Finance, should they have done it in retrospect, and are they being transparent or not by telling to their followers about it?
Yeah, I think for two of them, right, I don't think they know by just releasing the videos they can, cause such a big reactions. I think some reaction is expected. Maybe they get better than average views for those videos, right? I think that one could be expected for dramatic videos like this, right? But to bring down and then to cause like all these pause of instant withdrawal, I don't think they expected it now. I actually don't know about that part now. But I think the part I want to comment is that, they already unhappy with the company for the reasons that has been stated, right? I'm just thinking that what options do they have? Because first thing is that the fact is that they already have their money with Chocolate Finance and they already recommend this product to their viewers, right? And suddenly you want to, end this, let's say, relationship, or you just think that, okay, my money is better elsewhere, right? What options do they have? Should they just, quietly supporting them? If you quietly supporting the companies, what it means is that, just because of some, like remunerations or affiliates relationship, That's why they don't think the product is good, and they must continue to support them. Is that what we expect the influencers to be? It's also no, right? Because that will make them become very dishonest, right? So because we expect that for influencer, any product that you talk about, you can have positive comment, negative comments. At least you need to be honest with your opinions, right? So that's one thing. And if they are going to pull out the money, should they inform their viewers at the first place? So they already say they by the time the videos is out, they still have their money with the platforms, right? At least they are not like, oh, I pulled out last week and then now I tell you. It's not like that. So I think they already did their part to say that, okay, for transparency's sake, this is why I'm removing. And I watched their videos, right? It's not like it's super negative. It's just that, oh, the rate is not good enough, and then there are some, all these, situations with the AXS, which they also shared, right? I think we have to take it as face value that, okay, this is the situations. They are, unhappy with them, and they are taking their money out. I think that's quite fair, right? And I also think that for companies like Chocolate Finance, they say that they have all this instant withdrawal program. Sometimes they want to prove that things are okay, even if there's withdrawal. You just need to take a couple of days, right? I think we also, it's worth to have this sort of like stress test to them to see that whether whatever they said in the past, right, do they really have good mechanisms to handle a situation like this? I think these are all good things to have. Yeah.
So you're saying that in return, actually, Chocolate Finance should thank them for helping do a stress test to the system.
Imagine that these whole things came out during a huge financial crisis, like let's say a COVID crisis, right? Liquidity dried out, then they do these kind of things to them, right? To time it like that, right? Even worse, right? At least now, I think bond market is still functioning healthily. I think they are fine. I think they will survive. I think that it's a good way for them to build even better reputations if
Right.
the communication is handled well. So
Right.
that's the caveat.
In fact, I will add in a matrix that Bunti has shared in the group itself. I'm saying that if they withdraw and they tell other people, they are called irresponsible. When they withdraw and they don't tell people, they're called dishonest. They don't withdraw and they don't tell people, but they know it's bad, then they're called stupid. And they don't withdraw and they tell people, then they're called dishonest, irresponsible, and stupid. So I think that's the conclusion that you got
Yeah.
from this whole conversation, right?
Yeah, I'm not copying from others. That's my take. Yeah, I'm just asking like, what options do they have?
Also, to your point, that they know. Actually, I don't know whether they know that creating such a video will get higher than above or higher than average clicks and views. But and another user said that putting out such a video with such title is so misleading and it will cause panic. I can't help but think that this video has some malicious intent, especially when you say you plan to release it together with Seth. And I quote, I feel it is very irresponsible of you for creating such a fiasco with your video title and talking negatively, i.e., using the idea of a bank run at the beginning. You mentioned 3 reasons, but only cited 2. One is falling rates and one is AXS. You could have focused your message on reallocation of funds or something else less extreme. You seem to have a personal axe to grind with them. But now, like it or not, you brought everyone down with you. Don't think putting a ton of disclaimer will be enough. You need to weigh the consequences before your actions. There will be folks who will be seriously affected. The mental tortures of 10 days of waiting, wondering if they ever get back their hard earned money, and also those who have emergency or urgent need for funds, especially medical bills. And pretty ironic that you're part of the reason why some of them put funds in Chocolate Finance in the first place. Thoughts, Bunti?
That's the part that I think the reactions coming from all these people is just too much. I think, okay, if really the companies go under, then you come up with these kind of statements, right? Okay, then I think that's really true, because now really they brought down the companies, but the company is still there. So I think the situation is not like so bad that the company really bankrupt because of that 2 videos, right? So they are just processing the sales of all those funds units, and then they will just pay out. I mean, just a couple of days waitings. I think it's not a big deal. I think the big deal is the part where people are scared. The emotional damage, that part is real. I'm not discounting that part, right? I think that part can be better addressed by like the educations, like people really knowing what they are, what's the platform about when they put their money with, right? I think that's the part. So,
Okay.
but I still don't think that it is such a big thing.
Right. Further comments, they said, sue this fella, spreading fear, 104 likes. Despite your disclaimer, wait for the lawyer letter, 97 likes. Actually, a lot of this kind of genre of comments, I'm saying they're waiting for somebody to take action, whether it's the regulator, the company itself, and whatnot. And I think it begs the question again on pinning responsibility. Do you think that influencers in this case, especially in finance influencer space, they should be held at a higher regard because you're talking about finances? They can cause a lot of distress. And where should be the responsibility be pinned against?
Yeah.
Like, should they be taking responsible for creating this kind of banger title, thumbnail, whatnot? What have you not?
I think responsible part, the part is definitely a must. Okay, they are not like nobody. This one we have to recognize, right? Whatever they say, right, especially things that have the potential to go viral, right? They have to, have the at least the base expectation is that it will go viral and then they will have some consequences, right? That part, I think every influencers, like those who have larger subscriber base, like I think I will include you as well, Chicken. So any opinion that you have, right, I would say you have to weigh the consequences. But in this specific episode, it's just that I don't think stuff that they did, right, is bad just because they say they are withdrawing their money because they are unhappy with them. I think that's quite a fair comment because they work with them directly, right? There could be other things behind the scenes. I don't know. But let's say if they are unhappy with them, I think it's okay for them to share with their audience, right? So, and to me, I don't think, let's say, like a negative comment from someone should be able to bring down a financial institutions. If the financial situations really go under because like two videos, right? I think the situation is with the financial entities, not with whoever that surfaced this video or whoever that created these videos. Because you can go to DBS Bank and shout that DBS Bank is going bankrupt. You can shout all day long, right? I think, let's say even Kelvin, Seth, you, me, Chris, and another 10 more financial influencers, we stand at OCBC or DBS and we keep on shouting, this bank is going down. I think it would be a nothing burger, right? Because the trust is there. And the situation with Chocolate Finance is that they are startup, their reputations maybe not as established as a traditional financial entity. There are more concerns when situation like this happen. I think that is understandable. It's just that as long as the company is doing things right, nobody is going to lose money because of people withdrawing, because the withdrawing parts, right, is just part or parcel of this kind of business. So they have the right mechanism. At least I trust they have. Yeah. First thing is that please don't, like make these things so big that it's as if people are losing, hundreds of millions of dollars. It's not like that. It's just like, okay, take a few days to process.
Right. Last part already. Last comment that I wanted to also discuss. There is this commenter in one of the chat group. He or she said that, why are people listening to a bunch of so-called influencers who have dubious backgrounds in finance? The only background I can see from Seth's LinkedIn account is insurance. To me, salesman experience. I'm just reminding people not to just blindly follow this bunch of influencers wannabes. Unquote. Thoughts?
That's why I say, how come nobody asks these questions to us, right? Then we can throw Chicken's degree. Wow.
For context, actually, Bunti is a CFA, Chartered Financial Analyst. For those of you who don't know, it's one of the hardest exams to take as a finance professional. 2 questions. Do you think influencers should be regulated? Meaning, should they have a license? And number 2, do you think only people that are in the finance industry can talk about finance on social media? Or anybody can share their experience, which is in this case without any proper study or going to school or graduating with a degree, etc.
Okay, let me comment on the CFA first before I come to your questions. I think the CFA, right, just because I'm in the industry, so for learning purposes, I took the exams and that's it. I don't think having a certificate like that means that my words weigh more compared to someone else. I don't think so. That's not the case. I think we are all here create content because we are passionate about certain topics and we just want to share. We just want people to learn. And I also don't expect that whatever I say, right, people will just, believe. I don't think that is a healthy learning attitude. Everything that you say, I say, I think everyone who watch, right, they should come to their own conclusion. They should even challenge us when they think we are wrong. And you and me, we all enjoy, debating with our audience on even our YouTube comments, right? We enjoy that kind of, debate. Okay, so that's the healthy kind of, interactions. So that's on the CFA first. Okay, now come back to your questions asking whether we all should be licensed or not. I think this one, right? Our opinion not so important one, like whether we should be licensed or not. If the government say we should be licensed because of reason ABC or because of situation XYZ, right? Then it just have to be enforced. These are the stuff that regulators or government, they see the whole picture. They will set certain standard and they will set certain requirements. And if you fall under that category, then you need to just follow that, right? So you and your opinion, my opinion, not important. We just need to comply. If they say creating a finance podcast needs license, then we just ask like, how do I get the license law? If we want plan to continue to do that, right?
Maybe just to share from my own personal experience, right? In case you're asking me for my qualification, I went to dig into my own wardrobe, right?
Yes, bring it out.
So this is my finance degree. In case you all need, you can screenshot. So I hope you all can see.
Was
I didn't get the top. I wasn't in Dean's List or anything, but at least I managed to pass out, right? So we're gonna talk about qualifications. This one, and if one degree is not enough, right? I have a second degree in accounting. So if you're, but truth be told, I can tell you that at least in the financial industry, finance specifically, I don't know whether I'll get into trouble, but at least from my understanding of Seth and Kelvin, the amount of research that they do or the understanding and the knowledge probably can trump some of these people. That there's a lot of people with finance degrees also spouting nonsense, to be very frank. So it doesn't give you the instant pass and saying that you are one step higher or better than other people. In this case, it's really down to the personality of the person presenting the information and ideas. And of course, I know that I'm not infallible. I'm also human. A lot of people have different opinions with me. So we are open to listening to ideas and to talk civilly rather than try to bring each other down and say that, oh, you know license, you what? So if I have a degree means I can shut people down because they're not finance educated. Is that how it works? I don't think that's healthy as well.
My opinion is that we should encourage more opinions, right? More people to step up to share their knowledge, and then there's more discussion, more debate, and that's how we all learn, right? We don't learn because we learn from the persons who have the authority, right? I think that one just doesn't work at today's age. Today's everyone can use AI to fact check any statement that came out, right? Anyone who just on video say something, you can fact check. You use AI, right? Everyone can learn. Even you go and see doctor, and then after doctor say something, also you can just note down the whatever keywords that the doctor told you, and then you can just come back and do all the ChatGPT or use Grok to learn on the topics, right? I think now it's like all this knowledge is democratized. Everyone can learn. And that's the right attitude instead of you need to keep on relying on some authority, right? I think that one is just a bad habit to have.
So just hope that we all have a more conducive environment, especially in the finance influencer space. I think a lot of people are really trying their best. We are putting hopefully our best work. At that point in time, we are doing our own research and we are trying to be as transparent as possible. And the viewers will also understand where we are coming from and what role that we all play in this whole finance ecosystem. We are all also trying to do the best and to bring value to everybody's life. Hope you enjoyed this two-man podcast, and we'll see you guys in the next video. Goodbye.